Markets saw new heights last week as the S&P 500 and the Nasdaq both registered all-time new highs. Not to be ignored, the Dow Jones and the MSCI World Indices also traded within striking distance of their all-time highs. The weekly gains were fueled by a plethora of earnings, economic reports, Fed action, and general geopolitical optimism. Third quarter earnings continue to be reported over the next couple of weeks, with the greatest number to be released this week. As it stands, roughly 3/4 of the S&P 500 earnings have been released, with 3/4 of those firms beating expectations. The initial reading of third quarter GDP was released midweek, with a slight beat in expectations, showing an annual rate of 1.9%. This news was shadowed by the FOMC meeting later in the day. For the third time this year, the Fed voted to lower interest rates by 25 basis points to 1.5 to 1.75%. Most notably from this meeting, Fed Chairman Jerome Powell stated in the post-meeting press conference, "We see the current stance of monetary policy as likely to remain appropriate as long as incoming information about the state of the economy remains broadly consistent with our outlook," signaling an end to the interest rate reductions for the time being. This news took the S&P 500 to new all-time highs by the close on Wednesday. Finally, Friday's employment situation report beat expectations with both the October result and the revisions to the prior 2 months. Domestic indices traded sharply higher on the news, with the S&P 500 closing at the highs of the day.